What's up, everyone? It's Caddy with Money Vesting. So in this video, we are going to be talking about Walmart, ticker symbol WMT. And Walmart is going to be reporting earnings on Tuesday before the markets open. If I'm not mistaken, I believe it is before the markets open. And in this video, my goal is to go over all the revenues, the earnings, the cash flows, the valuations, talk a little bit about the balance sheet, and we're going to do an intrinsic value calculation on this company as well. I know that a lot of you guys have been waiting for an analysis on Walmart, so we're going to be doing that in this video. And I will be posting other videos on Home Depot. We'll be talking a little bit about Costco and some of the other retail-oriented stocks as well, whose earnings are going to be coming up. I already did a video on NVIDIA that's also scheduled to report earnings next week. So make sure that you do check that out as well. So I hope you guys enjoy this video and find it helpful. If you want more content, more videos, more private content, alerts, trading ideas, options alerts, and a lot of other benefits, including our Discord channels, the link is going to be down below. There is a 16% discount that is available on an annual basis, and that does expire at the end of February. So if you want to take advantage of that, the link's going to be down below. So this right here is going to be the third quarter fiscal year 23 earnings from Walmart. Walmart is actually one of the companies that generates the most amount of revenue in the United States. It is the company that has the highest revenue of all companies. So total revenue in just the third quarter alone was $152 billion. And that was up 8.7%. Net sales were up $151.5 billion in the third quarter fiscal year 23. And that was up 8.8% on a year-over-year basis. Operating expenses as a percentage of net sales was 22.8%, up over 1.44%. And they did report a negative EPS, but on an adjusted basis, it was $1.50. And operating income was $2.7 billion, which was substantially down. Adjusted operating income was $6.1 billion, which was slightly up 4.6% on a year-over-year basis, with a gross profit margin of just under 24% for Walmart. So needless to say that Walmart has been a very, very stable and consistent business, right? So if you take a look at where they were in 2013, $468 billion, and they've been able to grow that number to over $500 billion. The growth rate has not been pretty substantial. Like if you do the math here very quickly, 468, if you plug that number in over here, so 468, if you plug in to 2013, and this right here is going to be 2022, and last year they did 572.7. So 572.7, we're looking at a growth rate of 2.27%, right? So on a CAGR basis, compounded annual growth rate was 2.27% over the last 9 years for Walmart, which obviously is, nothing to write home about. And the reason for that is because the numbers are so big, right? If you were dealing with a company that was doing, let's say, $500 million to $1 billion, then yes, their growth rates would have been a lot higher. But this is a company that's doing almost $500 billion in revenue, so you can't expect them to grow 20%, 30% every single year. It's going to be incredibly challenging for them to do that. If you take a look at gross profit, also very, very nice growth from $116 billion to over $143 billion. It is a growth. It is a much higher growth than the revenue. And operating income has gone from $27.7 billion to over $25.9 billion, so a little bit under $26 billion. It's been more or less flat. We haven't really seen a lot of growth in operating income. So that just goes to show that operating expenses definitely eating into the profitability of the company, even though the revenues are up and gross profit is actually much higher. And I think the margins have gotten better over time. On the operating income basis, the company unfortunately is not able to execute as well, but they're obviously still profitable on an operating basis, and on a bottom line net income basis, from $17 billion to just a little bit under $14 billion. Of course, during the pandemic, their income pretty much fell to $7 billion, $14 billion, and then they rebounded really well back up to $13 billion. And I think this year in 2023 fiscal year, which they are going to be reporting for the fourth quarter, they will be just shy of 11 or $12 billion in entire fiscal year 2023. So we'll be able to kind of get a good estimate on what the valuation really looks like. Now, before we go any further, speaking of the actual expectations for next week on Tuesday, they are expected to report revenues of just a little bit under $160 billion with EPS of about $1.51 per share. So that's going to be the EPS estimate with the revenue, like I said, $160 billion, which is crazy. I mean, most companies don't even see that much revenue in 2 years, 3 years, let alone a quarter. Now, coming back to the diluted earnings per share from $5 to over $4.87. So it's been very, very stagnant, very stable in and around those levels. And diluted share count has gone down So it's gone from 3.3 billion down to 2.8 billion shares outstanding, and now trailing 12 months sitting at just over 2.75 billion shares outstanding. So that is really good. The company is buying back shares. That is a big plus point for Walmart. EBITDA, $36 billion, and it's been pretty stable, pretty stagnant throughout these years at $36 billion. So in one way, I mean, it's a company that's done really well in all these years, being able to kind of put out some phenomenal numbers, right? Very consistent numbers. But at the same time, there's no growth, right? It's a very, very flatlined business. Walmart is like one of those businesses that people really need. Because obviously people need general merchandise, people need groceries, people need, a lot of things that you just find in a convenience store. It's just these massive stores that they've built, pretty much all over the world, right? Most of the United States, Canada, Mexico, some places in Europe, and of course, I think there's one in India as well, if I'm not mistaken. But, it's just one of those companies that has done really well in that consistency for revenue, but there's literally just no growth at the moment. Now, in terms of the margins, we're looking at 24% gross margins. That's very much in line with what they also reported. The 5-year average for Walmart has been a little bit under 25%. If you take a look at EBITDA margin, a little bit under 6%, net income margin of 1.5%, that is obviously really, really low, and that's something that you'd expect from a retail company like Walmart. And then you've got return on common equity, 11.6%, return on capital, 10%. Return on assets is not that great. 3.6% is actually really low. They're not able to efficiently use their assets all that well. And if you take a look at the net income per employee, it's sitting at $3,898, whereas in the 5-year average, it was at $5,195. So what does that really mean? Let me just help you conceptualize that. That simply means that on a per employee basis, the 5-year average for Walmart was that they were able to generate over $5,195 per employee for as profit per employee. And that number, has gone down on a trailing 12-month basis. That means that unfortunately, they're becoming less efficient over time, meaning that their net income per employee is going down. If this number was going higher, that means employees are becoming more efficient. They're able to generate a higher net income with the same amount of headcount or less. But right now, this number is going down, something definitely to take into account at the moment. Now, surprisingly, Walmart is trading at a very high valuation. It's trading at 24 times earnings on a non-GAAP basis, on a trailing basis. On a GAAP basis, however, it's trading at 45 times earnings to 41, which certainly seems a little bit too high, certainly seems a bit on the high end for Walmart. I don't know about you, but 44 extremely high. Even 24 is a bit too high, but we're going to let that slide. I'm just going to pretend I didn't see that. And then enterprise value to EBITDA, we're trading at 13, which is not bad. And price to sales, obviously for these companies, Amazon's the same way. It's trading at a little bit under 1, which makes sense for a retail company. And then price to cash flow at about 13 to 16. So I think it's only the price to earnings, which is a little bit too high for a company like Walmart. And then if you take a look at the balance sheet, unfortunately, it is highly indebted. So we're looking at $11.5 billion in cash versus $68 billion of total debt, which leaves the company with a net debt of $56 billion. Compare that to Costco, which is an extremely lean business at same amount of cash, right? Walmart and Costco have exactly the same amount of cash, but when it comes to debt, it's like literally night and day. Walmart, $68 billion of debt, Costco, $9 billion of debt. And as a result, Costco is sitting on a negative net debt of $2.6 billion, whereas Walmart, $56 billion. Huge difference. Current ratio, for Costco, it's over 1. Walmart, it's under 1. And when you take out inventory, it's even worse, 0.2. For Costco also, it's 0.42. I mean, these are very inventory-heavy businesses, so I don't expect them to have a quick ratio that's over 1, but definitely something to consider here for these companies. Now, when we do an analysis on Walmart in terms of valuation, right, what is the appropriate value for Walmart, like where it should be really trading at? These are some of the numbers that are, based off the analyst estimates. So they're expected to grow earnings from $6 to over $9 to over $10 in all these years, from 2023 to 2028 and all the way through 2029. That's going to be a growth rate of about 8%, right? 8.3, 8.6%. That's going to be the growth rate that Walmart is expected to hit, right, moving forward over the next 5 to 9 years. So if we basically plug in some of those numbers, right? So if we plug in I'm going to be more generous. I'm going to go with 10%, right? Because Walmart, I want to see what that 10% number looks like. Now, the P multiple, right? This is where there's going to be a lot of debate down in the comment section, right? What do you think is an appropriate P multiple for Walmart? Right now, obviously, we're trading at 24, and on a gap basis, we're trading at 44, 45, whereas the sector median is around 19 to 20. So this right here is 19 to 20, and the 5-year average for Walmart themselves is around 22 to 20, right? And for me personally, even 20 is a little bit of a stretch because the growth rate is obviously not that high. It's 10%. I mean, paying 20 times multiple for a company that's growing at 10%, doesn't seem appropriate to me, but I'm just going to roll with it. I'm just going to go with 20 times P multiple. We're going to do a little bit less of a discount rate. So we're going to do 10% because they do have a dividend of about 1.5%. So 10% discount rate. And I've also got the share dilution down to minus 1% because they have been consistently buying back shares. And we end up with a fair value of about, $61, which, right now Walmart's trading at about 146. So it really is a question of the P multiple, right? Which obviously, depending on the fair value in the market price, that means that, Walmart would need to come down 60% in order for it to be fairly valued. But I'm kind of curious because, look, I'm not making anything up. Like, these are all numbers right in front of you. Like, you can see it. I'm just calculating all these things in front of you. Now, what Walmart really is trading at is, I think, on a 25 times P multiple, and then maybe a growth rate that's, really high. Maybe we're looking at 25% growth rate. There we go. So we're probably trading at, Walmart right now is trading at a price where it's projecting out that it's going to really do 25% growth in earnings over the next 5 years. And it's also trading at a 25 times P multiple, which we also looked at. So this right here is going to be that sensitivity grade based on a 25-25 split between growth and, of course, the P multiples. But if we kind of slow that down to, let's say, around 10% and around 20, you can see how much of a difference that makes in the overall valuation for Walmart. So I'll let you make that decision. For me, Walmart is a very much a value stock. It's not a growth stock by any means. It is more of a value/dividend stock. And even from that perspective, I don't really want to pay such a high multiple for Walmart. Let's just put it this way. Walmart right now is trading at a multiple that is higher or equivalent to that of Microsoft, Apple, Google, Meta, PayPal, AMD. All the companies that I just named, Walmart is either trading at their same multiple, P multiple, or higher. Think about that for a second. So let me know your thoughts, but this right here is going to be the technical breakdown. For the most part, we've just been trading sideways. Resistance is going to stay put at 149.50, so that right there is going to be that level to watch. Support level all the way down to 132. So this right here is going to be that next support level. And of course, all the way down to low 116s. That right there is going to be that support where we were trading at back in May of 2022. And, when we heard about, Walmart dealing with a lot of inventory, it had a couple of really brutal days. It dropped 11% and then another 6.5% in just a few days. Walmart had dropped over 21%. So it's not unlikely, it's not unusual for us to see Walmart, come down and sell off quite aggressively. If there's a valuation reset, I would not be surprised if Walmart does drop, 30, 40%. But those right there are going to be some levels that I'm really paying attention to. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. At least check out the link. There's a 16% discount, and I'm confident that you will definitely find a lot of value, a lot of insight into joining our Discord. We've got over 3,600 members, so fundamental, technical analysis, and macro analysis, all that is going to be included. As always, happy investing, and I'll see you all in the next video.